About a decade after KeyCorp cut its dividend as a result of the great financial crisis, the current dividend payout looks to be in much better shape. Similar to many bank stocks, KeyCorp has traded sideways for about the past 2.5 years. Part of the concern is that investors are wondering about falling interest rates and whether the net interest margins will be squeezed. Secondly, how much longer will the economy continue to grow? Regardless, KeyCorp, which yields about 3.8%, has been included on a list of the 10 safest dividend stocks assembled by New Constructs. So, let's take a look. New Constructs, which reviews the portfolios monthly, looks for stocks that it rates highly, have positive free cash flow, and yield more than 3%. About a decade ago, KeyCorp cut its dividend to a penny per share. The dividend remained at that level for 2 years, but in May of 2011, the dividend was raised to 3 cents a share. Subsequently, the dividend has been at 17 cents a share and is expected to go up again in the next 12 months. The bank, with assets totaling about $140 billion, has increased its after-tax operating profit from minus $286 million, that was in 2010, to $1.8 billion over the trailing 12 months. Excluding the year 2016 when KeyCorp acquired First Niagara Bank, the bank has consistently generated enough free cash flow to pay its dividend. In 2017 and 2018, KeyCorp generated $2.8 billion in free cash flow, allowing it to pay $1.1 billion in dividends. Although bank stocks still face several issues, a 3.8% dividend yield offers some good protection while you wait. So now let's go take a look at our charts. And we're now looking at the 20-year monthly chart on KeyCorp, and the symbol is Key, K-E-Y. And for disclosure purposes, I do not hold any shares of KeyCorp at this time. The bottom was set in mid-2009. Then the uptrend began, say, in late 2011 and has continued up to today. Now, looking at this, the pattern here, you have a bottoming or consolidation, an upward move, a consolidation again, another upward move, a consolidation, and an upward move. And this is a little bit steeper of a consolidation, but still I think the stair step upward or climbing that wall of worry looks pretty good. We've stayed here within that 50 EMA for the most part, being below there in 2016 and in late 2018, early 2019. But for the most part, I think I like that pattern. Looking at the MAC, we can see, of course, 2009 here. But since then, it climbed up all the way to the zero line and has stayed more or less above the zero line for the past several years, with the exclusion of a slight period here in 2016 and then, of course, right now. But looking at this pattern here, like so many other stocks, it looks like a repeat of 2016. So we're a little bit under zero, but the fast line looks like it's going to come through and cross over the slow line, I would expect in the next quarter or so. Moving on down into the histogram, we see that the decline here was a little bit more severe than 2016, but not too much. And in here to the price rate of change, again, a little bit more severe than 2016, but yet I still see the fast line trying to climb above the slow line, and we're not that far away from the zero line. So I think things are improving. And that improvement is also shown here in the relative strength. We're at a moderate 50.78, but for the most part, you can see the upward trend, say, in the last several months or so. Again, not all that dissimilar to 2016 here. Also, into the stochastics, similar to 2016. I think the consolidation is occurring here, and it actually looks like the fast line has had a pretty good bounce off of that bottom there, and it's heading toward the 50 or midline. Going down into volume, volume looks just fine. And then here, the Williams, same sort of thing with the bottom there in late 2018, but the uptrend has continued. We're just climbing above that negative 50 or midline, and I think it wants to head up higher. Moving on back up here to the price chart. To me, things look good, especially with a dividend yield of 3.8%. I like the way that the price pattern is moving on up, and I like the way that the MAC is showing up as well. But as usual, please conduct your fundamental analysis. But for today, that's ChewDog Charts. Thank you.